Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, July 31st, last day of the month. We could get a little bit of a window dressing here, but doldrums of the summer is upon us, and we had a lot of nothing yesterday. A lot of consolidation, which is a good thing for the bulls to consider. We did not do virtually anything. You really had to dig deep and try to find a stock or two that was moving in anticipation. And actually, as I was digging deep, I have a couple of sectors, actually one sector, which would be the alternative energy sector, dial it down into the coal sector. I mentioned that about a couple of months back, or about 6 weeks back. They consolidated, came out with some bad earnings, and then all of a sudden now they're starting to move. So that's probably going to be the next decent sector to trade. And I'll keep you posted on when I think it's really time to jump in. I mean, you could even start dabbling a little bit in these some of these coal stocks, but that was really about it. That's the only really sector I really saw actually moving. Maybe some of the smaller banks, but nonetheless, we had a consolidation day. Totally waiting for the announcement from the FOMC on Wednesday. Bank of England and the ECB, the European Central Banks, also will announce similar. Make similar announcements as well. And then, of course, we have the non-farm payroll numbers of weekly job claims on Thursday. So a lot on the docket, big stuff on the docket, and that's going to definitely be a market mover. And if the Fed does not do anything, I would expect a sell-off here in the markets. We are at lofty and frothy levels. A lot of indicators saying that we're overbought, and I'll go over that with you in a moment as well. So I would like to kind of actually get right into the charts here. One thing I wanted to point out here, and I'm not a bond guy, but I do look at the credit markets because I've always been told 24 years doing this that they're always smarter than the equity guys. And here's a 10 TNX weekly chart, 10-year Treasury note yield, right? So when they purchase bonds, yields drop. So what's been happening here is that they've been actually a lot of market participants have been purchasing bonds, and yields are driving lower, and equities are still rising. So that can't change. That can't happen much longer. So yields are hitting right now ridiculously low levels. I mean, a lot of these companies are issuing notes and coupons at like 0.085, 0.045, which is just totally ludicrous. And I have a funny feeling that when these yields eventually start to tick up, I think you might even have a pretty massive run out of equities and into bonds, just for that safe haven, because safe haven right now is king, and that's just something that's really going to be concerning. I mean, we have less than 1% rate, and people are actually buying these coupons and are happy with it. So that's definitely not a good sign. To say that they're complacent of saying, hey, my money is safe and I'm not worried about mutual funds and what have you. I'd rather get 1% or less than 1% and be happy that my money is going to be there in 5 years with a coupon. So that's not good. And if that does happen and yields really start to rise, I mean, we're in oversold conditions here already, and these yields start to rise. I think that's another worry, something that the bulls have to be worried about, because of the fact is the yields are at these all-time lows, and they just can't stay low forever. It's just not going to happen. Right now, Bernanke's driving that wealth effect to have investors and people run into stocks because there's nowhere else to put your money. So that's where you get this overinflated stock market, and that's why it's a concern. Day traders obviously don't have to worry about that, but the longer-term investors, long-term swing traders, be cautious about it. And again, now's the time to be putting your hedges back on again. If you did not do so last week, I would definitely encourage that, especially going into these risk events moving forward. Okay, so enough with the yields. Let's get into our NYMO. We, as you can see here, we did bounce back up again. The McClellan is not really saying much, but our bar chart momentum index I showed you yesterday is at lofty levels, really due for a pullback, and I think that's going to probably occur. I think that the Fed says nothing, because the Draghi had mentioned something that he's going to do whatever it takes to keep the euro. I think that Draghi did Bernanke's job, and he doesn't say anything. That's just totally opinion, nothing tradable. But I do say either way, I think the markets have this priced in, and the markets sell off either way, whether he does something or he doesn't do something. And if he does, maybe pop a little bit higher and then eventually sell off, Thursday or Friday. Again, markets just can't rally 30, 40 S&P points every single day without a pullback. So just something to be cautious about. Okay, now let's take a look at our VIX. And our VIX, we did get a little bit of a pop yesterday, no big deal. But again, this is a very valid pattern here, and this is something to be watching, because if the VIX starts to move higher, you're going to have a sell-off in equities. And that's something that I'm watching here on a consistent basis as well. I want to show you the U.S. dollar. U.S. dollar pulling back again, consolidating into this 50. Now, we broke the 20 and a 50, and then, of course, we have this lower bottom channel if this does start to move. And this is all going to be factored on what Bernanke's going to do. So the dollar's really not going to do much today or tomorrow morning until this announcement comes out, okay? So that's something to keep an eye on. Another concerning thing here, I've been showing you this chart for weeks now, is the Shanghai Stock Exchange broke support with a big engulfing candle. This is really troublesome, guys. This is really, really troublesome. And as I mentioned to you about China, we're going to have a big China play in a little bit, but we want to make sure all eyes are off of Europe and back onto China, so we get that fundamental value of the trade, and then we're going to look to put some trades on on a China trade. And that could be any type of commodities or oil, gold, soft commodities. As you know, right now, grains have been rallying for the drought in the Midwest. But here, this is concerning. Another couple of days lower, or we consolidate and we break lower, then that's going to be a true break. As you know, sometimes they do break them, get everybody to the short side. They have a bear trap, and then they rally and back up again. So we're going to see this in the next day or so and see how this thing closes, but very concerning as of right now. Copper, same thing. As you can see, can't rally. We have a little bit of a doji star here. We did rally for a couple days. Traditional bear flag here right into resistance. So, again, another concerning chart we need to really keep an eye on, okay? Let's go into the indexes. I just want to show you here. I'd like to show you the 10-day move, the 10-minute chart on the SPY. Absolutely nothing happened. Again, if you weren't looking, you try to really have to dig deep, but then again, you also can get in trouble. So you got to use caution and really analyze what type of a trader you are, what type of experience do you have. But here, nothing going on here, guys. Absolutely nothing. Big chop, and could definitely churn your account here. Okay, this is going back from here. This is Friday's big run-up, and then, of course, Monday. Next chart, S&P 500 chart. We are sitting at the 76.4% retracement, Fibonacci retracement. We did put in a doji star yesterday. Now, this doji star is totally indecision. Can say, where the next move is until the next day, till today's candle. If we break this candle and we have a nice volume day lower, then this would be valid to the downside. Okay, or as of right now, it's just an indecision candle. It's just basically a pause, okay, within yesterday's range. But we are at these areas that are really lofty here, 76.4%, logical spot for retracement lower. Again, we do have this area here, this long-term trend line, which is going to act as some good resistance, and that's going to come in right around the 1400. Nice round lot number. 1423. Can we get there? Absolutely. I mean, S&P is running 20 points a day now on a good day, so something definitely to consider. I wouldn't just go out short the market here, but I'd like to get a confirmation that we are headed lower. And again, that's really going to happen tomorrow. I don't think anything's going to happen today. It's going to be. I should be very, very quiet day. And this is just the Spiders Daily, just to show you volume. As you can see here, very similar indecision candle, back up and down here, large candles. So really, we've just been chopping around this range since June, July. And now we're going into August tomorrow. So, again, guys, just keep an eye out here. Volume's been very, very light on the way down as well. Okay, transportation sector. As you know, this is a concerning sector to me. I watch this on a regular basis, and we are just underneath the 20. We did get back above the 200 and the 50. That's a good sign, and the 200-day is trailing up, not rolling over. But this is here. I just drew this big, large apex here with this triangle formation. So let's see if this thing could really rally. If you remember, I had these arrows back here, and I said it couldn't break here, this upper trend line. So this is a valid trend line, guys. Look how many times it couldn't break high. It broke higher, fell back in, broke higher, fell back in yesterday. So something to keep an eye on as well. I think there's a lot of cracks in the walls. I mentioned this before, and this is something that we really need to keep an eye on. Again, we trade the trend, trade what we see, but we got to use caution when we're trending. When we're trending higher at these lofty levels, I think it's just time to tighten up stops. Reduce your risk a little bit. Here as well, Qs, big cap tech. As you can see here, lower volume on the move up. So nothing that's telling me, hey, we got confirmation we're going to be exploding higher. This does not tell me that. And we're coming into seasonal weakness right now in August. As I mentioned, first 2 weeks, we usually get a worser pullback, and then the other 2 weeks we start chopping around, creating some sort of a base, and then we move higher going into sometime September, and then of course we usually get that type sell-off in October, first 2-3 weeks of October, and then we rally into the new year. Again, just a longer-term picture. But SMH, as you can see, SMH guys, nice rally, I will tell you, real nice rally. We're up against 20. We're outside of these bands now. 5 days up, a good pullback here, right up into this area here, bull flag, and then rally again. Sure. And then we take this out, then I think we got something really going in the semiconductor space. I like the stochastics. I like the MACDs curling up here. Definitely not overbought in the indicator sector. Price-wise, yeah, I'd like to see a little bit of a pullback. Okay, well, that's really it for today, guys. Not much to really talk about. Everything is still status quo, and it's all waiting on the Fed and see what Bernanke does for tomorrow. But hopefully we get a little bit of movement today, but it'd be interesting to see how this market reacts tomorrow. And then also, keep an eye out on what Europe, any news comes out of Europe will definitely move the markets. Have a great day today trading, and we'll talk to you tomorrow. Take care.